Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the market's weekly analysis, where we look at what happened in the market last week and how we can plan for a middle trade tomorrow. So this is analysis for October 25th, Monday 2021. So we'll be looking at the charts and the price and the patterns. You have the charts right here, and we're just looking at the blooded points that is listed here. The price action, if you see, it's a bearish dark cloud cover. Dark cloud cover is something like this, right? Weekly basis, if you see that it did a false breakout and then closed more than 50% of the previous green candle. So it's a bearish kind of a reversal signal, right? But it's not confirmed. Only if it goes below that can we say that it is working. It's not a confirmed mandatory to work in this cloud patterns, right? But there is a likelihood of that working is what it is. It's a bearish candlestick pattern. And what happened was Nifty fall 1% last week, right? And that happened after a false breakout of trying to move 1.5% higher and then hitting an all-time high of 18,600 and then coming down with a 1% close weekly basis, right? So the interesting fact here is that contrary to the Nifty, the bank index, it has closed bullish green candle with 2.6% of up moves, a breakout of 1,000 points, and it has formed a new all-time high, right? Which is at 4,500, and it adds up to just two green candles has formed 2,900 points in just 2 weeks, right? Which is amazing. So Bank Nifty is super bullish, while Nifty is clearly bearish from the candlestick and the price patterns, right? So the latest Nifty candle daily, till now we are seeing the weekly. Daily candle, if you see, it's a bearish candle, right? But at a previous support level. And Bank Nifty, latest candle, you see, it's a green candle, but it's an inverted hammer, right? And it is at a support level, right? So that's about the daily and the weekly candlestick patterns. Now, what happened during the last week is 5 days we had a red candle, starting with a spinning top, then clear bearish candles, 4 of them consecutively, making 5 clear red candles, which is exactly opposite of what happened the previous week. But we had 5 green days, 2 or 3 of them were gap ups and pro gaps, right? So Bank Nifty is clearly showing that it is walking on the Bollinger Bands. If you look at it is walking up on the Bollinger Bands, right? If you imagine we have 1 SD, Bollinger Bands, 2 SD Bollinger Bands, then that's what is happening, right? So the Bollinger Bands walking and uptrending is clearly seen from the candlestick patterns and the volatility expansion from the Bank Nifty. But Nifty has fallen off from the Bollinger Bands, and then it is near to the median. That means it's likely to take a support of the median of the Bollinger Bands and then bounce up. So that's what's a volatility expansion that happened last week, and how the price behaved in the two indexes differently, right? So this is what we are talking about, right? You have 1, 2, 3, 4 for 5 days of downfall after 5 days of up move. Here you have a clear bullishness that is happening, contrary to what the Nifty is doing, right? This is a weekly candle. The weekly basis, we can see that it's a dark cloud. Here you can see it's a gap up and all-time high, and clear bullishness that is evident in the Nifty. For the bands, if you see it was walking on bands, right? The All-Shady had expanded on both sides, and then it dipped towards Nifty, dipped towards the median. But here you can see that it's very far from the median. This expansion has happened clearly, and a breakout walking on the bands is happening in Nifty daily. Now look at the support and the resistance. So Nifty, you have 17,950 to 18,000 support, immediate support. That's where it is bounced very close by 1850 or something. So that's going to be critical, very, very critical support region. And after that, if that breaks by some reason at 7950, the next support below, then you have 17,600 and 7650. And if that breaks, you have the 7450, 350 kind of range, right? And what is the upside? The upside, you have the previous resistances that was taken out, no activeness, previous supports, right? So what you see here, all of these candles will become the resistance during the upward journey, right? Now that it has fallen down, it just will go up, right? So 350, 450, the first resistance. If that's cleared, you have the all-time high at 18,650. And if that is cleared, then you have the next all-time high that can be projected using the Fibonacci, which is 18,900 to 18,950 lows. That's the resistance number 3. This is all on the Nifty. But the Bank Nifty, if you see 40,000 is where it is clearly converted back to. That is a bigger support. 40,000 to 40,200 is the Fibonacci projections 38 level also. You can see which is converted and 40. And if that support is broken, then you have 13, 39, 350, 39, 500 that range, which is the previous swing low. Then you have another previous resistance and Fibonacci projection 23 level retracement is what we get it. If that breaks, that's 38,800 near to 39,000 that range. So that is also broken. We have 38,000, 38,350 that level, which is also previous resistance level. Now on the upside of the Bank Nifty, it is uncharted. Like 40,900 would be the next all-time high resistance that I find, which is Fibonacci 50 extension. 42,000 after the Fibonacci 61 extension, which is also a rounding number, 42,000. After that, if that is going to 33,200 Fibonacci 78, which is not likely to happen that immediate, right? So these are all the supported resistance in Nifty and the Bank Nifty, which you can look for the next trading sessions. Look at all those that we have talked about, right? This is 18,950. Then you had a support of 18,350, 450, which is broken. And now we have just taken a support of 17,850, 950. So if it is bouncing up from this place, and the first resistance will be the previous support that we have taken here, which is 350. And after that, you have 850, then you have 950. Downside, you have this resistance, then you have the previous swing lows, which access this. And seeing this case in Bank Nifty. So it's an all-time high uncharted. 4,900 will be the next projection level for Fibonacci. Right now it's at 40,000, 40,200 level. That breaks, then you have 39,500 level support, which is the previous swing low. Then that breaks, you have a Fibonacci 23% projection or extension, which is at 39, near to 39,000 levels. And if that also breaks, then you have 38,000 kind of levels here. So this is what we talk about. Now momentum and the trend. The price, the momentum of the price. Nifty and Bank Nifty, if you look at that, right, all the time frames still remain bullish even after 5 days of continuous downward. Still, it is bullish also. But the thing is, on a weekly weekly charts, if you see, it's a 4-bar bearish direction, which is still valid, still does not net the chart, right? But it is confirmed and it is working properly because of Nifty has followed this mess now. Try to indicate the ADX, if you see, this is still in the bullish zones on both time frames. So trend and momentum still bullish in all time frames. But the thing that is to be noticed is that there is an ADX bend. There is an ADX bend that you can see, right, which has happened on the Nifty, even though it is in the bullish zones. Here that bend is not there. Bank Nifty right side, you can see that the ADX strength is rising up and the DMI positive also is rising up. So it's super bullish. Here this ADX trend has taken a dip. It is not crossed out, still in the bullish zones, but main thing is it has lost its strength. See, last time it has talked and how much it dipped. So it is likely to take reasonable dip whenever the ADX trend indicator dips. Okay, so this is what we're talking about. On a weekly basis, Nifty weekly candle still has a price moving up and then momentum falling down, and it has started working, confirmed, and it has fallen down. Now we don't know whether it will meet the target or it will take a support from here and bounce up. But we'll have to wait for the next week to see. Otherwise, momentum is intact. And left Nifty daily and Nifty daily, both a momentum, trend, everything is intact. Only thing, strength is lost in Nifty, and Nifty is super bullish on trend and momentum both. Now, open this data, if you see, you can see that the interest has shot up actually, right? It has shot up 11% nearly previous week and settled at 17.5. So we had seen that it has gone down to the 10 levels, right? Then it had moved up to the 19 levels and then again dipped back, and then it is trying to form a range between the 15 and the 20 most likely. So now that it is 17, it can further go up and then move to the 90 levels and then again cool off till the 20. So this may be the range that may be here to stay for some more time. You can see that it's the IV implied volatility 16.4, which is bigger than the HIV, and the IVP also has increased to near to the 48% level, but it needs some more movement on the upside for the sellers to really benefit from it. Right now, open this data analysis. If you see for the futures, you can see that it's a long winding and it is bearishness. As the charts are saying, it is bearishness. People are long unwinding that and going short on the Nifty. The Bank Nifty is a long build up, clear, right? The October monthly expiry is going to come next Thursday. you can see that monthly expiry is 18,200 as the highest call writing area. Highest resistance is going to be 18,200 and 19,000 after that long gap. But the downside in supports are there that can be seen at 70,500, which is also quite far, right? And also we have substantial amount of put writing in that, 18,200 also. So 18,200 is going to be very critical, where you have some sort of triangle build-up that might have happened. Right? There is put and the call both writing seen at this level. So that is where the fight is going to happen for the next monthly expiry most likely. Similarly, BANKNIFTY, if you see 40,500 over highest call writing. As per the charts, 42,000 has got high resistance beyond that. So 40,000 is already done with, and 40,500 may have resistance. And then support, you will see that 40,000, good support. 39,000 also very good support. So put call ratio, if you see 0.64 is not at all bullish on the bank, only Nifty. But Nifty is one that is bullish. So futures writing options, and you see Nifty is bullish much more than the BANKNIFTY. And BANKNIFTY, there is a wide range of 17,500 being the highest call writing, and so fight is going to be for the puts and the calls that's written at the 18,200 levels. That's a global opportunities and the volatility. Now, this is what we are talking about, options data, where we can see the green as the highest call writing area and the red as the highest put writing area. Left is BANKNIFTY and the right is BANKNIFTY. This is what we discussed earlier, put call ratios and all the things is according to the charts that you're seeing here. Now, sectorial performance, if you see last week, ID further corrected 0.5% more, but it has formed an inverted handle, which probably may be signaling a reversal of the downtrend to the up move, right? Now, yeah, so weekly momentum is fine, but the daily is slipped to the sideways still, and we have to wait for that to catch up. So IT, wait. FMCG dipped further 6% down, and there is a weekly diversion that has come into play, and daily is sideways, so stay away from it. The momentum catches. Metal 5.5% of down move, but the thing is, short-term momentum is slipped, and then you just have to wait, right? 5% down. So big dip has happened on the FMCG and the metal last week. IT also kind of consolidating, but momentum is lost in all of this. Auto sector, if you see, it has moved down 3%, but still the momentum is good. So only sector where we can, go for long as per the momentum is this. And there is a daily momentum divergence also, reverse divergence, which can work out and bounce up. So auto is only sector. Farmer slipped 5% in last week, and then lost the momentum on short and medium term, and then farmer also stayed until the momentum catch up. Reality also lost daily time from short term, although it is long term and medium term make bullish breakout of cup and handle. It lost 5.5% just last 1 week after a 35% of up move breakout of cup and handle it happened. So stay away until the momentum is there, no matter what long term. Short term means stay away, right? So only Octo is, as of now, all the sectors are showing bearishness, right? As of now, except metal, which also had fallen down 5.5% and then still maintaining the momentum, right? Institutional participation is not very encouraging. Fyers sold 7,350 crores last week, and the thing is, the domestic institution also sold 4,500 crores. So it was big selling that happened from the institution side. Derivatives are also dipped. This is not encouraging. It's not optimistic. Global markets, if we say the US market, had most of dollar index, you can see that yeah, I think yeah. So let's just ignore what is written here. We'll just discuss a bit on the charts that's shown here. We'll look at all that. So if you look at the charts, probably this write-up may not be updated, but this is the latest charts on the weekly. You can see that it's at a resistance zone, which had attempted to break out, right? And downside you have the dollar index, not upside you have the currency pair that is traded in the NSE. So dollar index is showing bearishness after it attempted to cross the second resistance upside where it is marked after a breakout from the previous resistance, but so failing there and is slightly weakening. And this dollar currency also may be indicating the same thing. Now, crude oil is shot up, right? It's shot up when at 83 plus levels, and it is at multi-year high levels. Cup and handle formation right side on the gold, and it is turned bullish in the last 2 weeks, you can see, and it is still at a support zone. It is still not broken out from the trend line. It is in the handle formation, and there are resistances upside, but gold is not ready to fall down. Is something that is clearly seen from several weeks. Stock picks, Axis Bank, it is having an inverted head and shoulder pattern. Watch out for this neckline. If that is broken, that resistance is taken out, then you can have a big movement. So this can be a good swing trade if it works out. Reliance Industries had declared good results. At the same time, you can see that the charts are showing that it is broken out from a rounding pattern earlier on the weekly basis, and also it is trending up. It is retraced, and now we can see that there is a reverse bullish divergence, which can give a good upside, right, for the swing trade. Payoff diagram, this is a downside predicted and fly, you can say. So there is good risk reward, probability of profit, and then at a low capital, and then it's only thing that you need to worry that it does not cross above 18,400, which is not likely when market is going. It may happen in upcoming weeks, but for the next 1 week, this October expiry, it may not cross the 18,400 most likely, right? And downside anyway, if something happens, we are at no loss. So that's one of the strategies that you can try out on the index next week. Nifty. Now just to wrap up, Nifty did a decent correction of more than 3% from the top. That's what happened last week on the Nifty. Right? We had been anticipating for correction. Last time it corrected, it was 2%. Now it is 3%. So there is a breakout after a correction that has happened every time. So that same may happen if it is taking a support from here and then it bounce. But yeah, the thing is, it can't reverse and bounce because there's a support level. And the bank is supporting like anything. Like there is a bullish strength in the price, momentum, and the trend, much more than Nifty. Bank Nifty is very bullish, very supportive, and Nifty has done a decent correction. So bias in the short term is cautious bullishness. Right? Cautious because anything can happen in the market. Right? It could break down from here and then take a further support, because there was bearish divergence which was active on the weekly basis on Nifty. It's still active. It still not met the target. It can go up to 550 and 500 crores. That's why it's bullish. But at the same time, it's supports on it can bounce and it will support it. So probability is that it can bounce, but you never know. And there is quarterly results that has come out on the weekend, so then maybe positive it can create a bounce back, but the bounce back will sustain or not, we'll have to wait and watch, right? India is higher levels of 16 to 19, that range. Last week also we are seeing that it is hovering around that up and down. So backup posture cycle is going to work, right? The question is whether it is going above 20 or not in the weeks. Is only that we are watching. Then it's kind of a little risky for the option buyers, and in general, volatility and chopping may increase. But as long as it is hovering around this range, it's more predictable, right? Swine flies, calendar spreads, and all work at this volatility range, right? And use always what I say, vertical spreads, bull calls, bull put, bear put, bear calls, all that, depending on your view on whether you are going long or short, instead of going for naked buy yourself, which is dangerous because profit booking at higher levels can happen. Volatility, chopping, sudden choppy moves can take out all the profit, and the direction can go wrong completely. V-shaped moves can happen. So applying the option strategy is the better way, especially vertical spreads. Right? That's what we've mentioned last week also. Positional traders has to be alert, on where the levels that was mentioned. Look back once again at the support and the resistance levels that we talked about. Wherever there is a confluence and wherever there is a support and resistance, we have to be cautious depending on where you entered. The long or short has to be accordingly cut off or trailed as per your levels and your entry and your targets and all that. So that is something that has to be kept in mind, right? So that's a wrap up for the next week, right? I hope you got a support in framing your own market view for the next week, and also I hope this will help you to plan your trades better. If you like it, hit the like button and share it to your friends or everyone benefits. And thanks a lot for watching, and happy trading and happy learning.